video game adoption has been going up over time and pretty steadily. PC is now the single largest entertainment platform. It is the largest gaming platform, and GeForce is now the largest gaming platform in the world.
What's up, guys? Ben here, and welcome to Motivation to Invest. As the planet went into lockdown, gaming saw a massive increase in numbers as people were forced to stay at home. According to the BBC, games such as Call of Duty and FIFA reported record player numbers, which boosted the financial performance of gaming platforms such as Activision Blizzard and Electronic Arts. But this is not just a temporary phenomenon. According to Research and Markets, the global gaming industry is expected to register a compounded annual growth rate of 12% during the forecast period between 2020 and 2025. This is due to a variety of factors. Blockchains provide a useful tool for gamers for various reasons, including decentralized asset exchanges, verifiable scarcity of virtual objects, and collectibles, in addition to fast and secure payment networks. There's also rising internet penetration driving the demand of the market. Global Web Index's data also indicates that more than 1 billion people around the world now stream games over the internet each month. Platforms such as esports betting and fantasy sites have attracted more investments, which is driving the market. Approximately 1/3 of esports fans in the US participate in online amateur tournaments. PCs are now the largest gaming platform, and Nvidia is the company which is the market leader in providing the graphics cards for these PCs for the ultimate gaming experience. Nvidia's popular GeForce graphic cards offer the ultimate experience for PC gamers. But Nvidia's graphics cards are not just essential for PC gaming, they're also essential for visualization, for architects and engineers, and even video editors, especially those who wish to edit 4K. In addition, powerful GPUs are also essential for big data analytics and artificial intelligence, as it requires a vast amount of computing power to run these various algorithms simultaneously. This is a vast infrastructure which is spreading from autonomous vehicles like the Tesla to the cloud. Nvidia's business lies at the convergence between four growing industries: graphics for computers with its GPUs, data center GPUs and CPUs, professional visualizations, and even autonomous driving. Recently, Nvidia announced its Q2 earnings, which smashed records out the park. So should Nvidia stock be part of your portfolio? Well, in this video, we're going to find out as I deep dive into Nvidia's business model, stock, and financials. Be sure to watch this video till the end to find out whether I personally have bought shares in Nvidia. Without further ado, let's dive in. Welcome back, guys, to Motivation to Invest. Before we get started, it would really mean a lot to me if you guys can give this video a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, let's get into the video. Right, guys, so diving into the investor presentation for Nvidia, a computing platform company. To put it simply here, we've got sort of brief history, revenue by market platform. So as you can see, gaming offers the largest revenue, followed by data centers, and then we've got ProViz, auto, and other revenue there. But data center and gaming, they're the two large growth drivers for the company. Growth drivers here, as you can see, gaming, artificial intelligence, augmented reality and virtual reality, and even self-driving cars or autonomous vehicles, popularized by, of course, Tesla. So gaming made up 51% of their revenue, data center 27%, and then professional visualization 11%, automotive 6%. So data center, they've got high performance computing, HPC and AI, with every major cloud provider. So they've got their clients include Alibaba Cloud, Amazon Web Services, Azure, Google's cloud platform, IBM Cloud. So they're with everyone, basically. They're providing the data center services for those. So here's just an overview of their very large and diverse customer base. They've got reaching over 200 million PC gamers, every major PC OEM, ODM platform, every major graphics card manufacturer. That's on the gaming side. On the data center side, they've got all the major cloud providers, Amazon Web Services, Alibaba Group, Microsoft Azure, Google Cloud Services, IBM Cloud, and more. And then that's the high performance computing side. They've got the major people, vertical industries. They also work with Walmart on a variety of operations. 40 million designers and creatives who use their visualization services, and 20 million enterprise users. And then the auto industry, they're working with Audi, BMW, Honda, Mercedes, Toyota, Volvo. Now, a lot of that presentation was for Q1 of 2020, so I'll just go over the details from what I've learned for Q2. So data center, cloud service providers, supercomputer providers, record high revenue, 167% year-on-year increase on their data center side. That's for Q2 of 2020. And they've also created the largest chip ever, the A100 performance, which has increased by 20x. Professional visualizations used with AutoCAD, Autodesk, video editing. However, that segment of the company is down by minus 30% this year, presumably due to all the offices being closed and a lot of companies going through tough economic times. The automotive side of their business is also down 47% year on year, which followed the trend of the overall auto industry taking a hammering. However, the good news is the automotive part only makes up a small amount of its revenues, but this is still a growing industry. And as we know, companies like Tesla are pushing the use of its own artificial intelligence software chips for autonomous driving. They also announced a landmark partnership. They announced a big deal with Mercedes-Benz in that every vehicle in its lineup beginning in 2024 will have software-based Nvidia chips, especially with regards to automation and end-to-end Nvidia technology, spreading from the car to the cloud, with over-the-air updates similar to Tesla. They also brought GPU acceleration to big data analytics, one of the fastest growing industries. According to the earnings call, Spark is the world's leading data analytics platform used by 500,000 data scientists and 16,000 enterprises worldwide. Q3 projected earnings, they project a revenue of $4.4 billion, gaming to be up 25%, data center up in single digits, auto up in single digits, and it's around a 62.5% margin. Right guys, so diving into the numbers, here we are on Stockopedia. This is the stock research platform I use. Now, a lot of you guys always ask me what platform I use, so here it is, Stockopedia. I've actually managed to get you guys a special 25% off discount link for this software. So if you want to check it out, I'll leave it in the link below. It's exclusive for the viewers of Motivation to Invest only, and it is a limited time offer. So feel free, use the link below, sign up to Stockopedia, see what you think, see if it fits your investing style. So Nvidia, technology, large cap, high flyer, quality 98, value 5, momentum 98, giving it an overall stock rank of 78. This is one thing I love about Stockopedia is each stock is given this overall stock rank, which allows you to quickly assess if a stock is a good stock or a bad stock. So let's dive into the details here. Total revenue over the past few years, it's been increasing around 18.5% over the past few years. I would call that a true growth company. Anything around 20%, I call that a growth company. They also pay a small dividend, which is good for a technology company. So checking out the revenue here, revenue is forecasted to increase for 2021 and 2022. Net income is forecasted to increase for 2021 and 2022. Earnings per share is also forecast to increase for 2021 and 2022. Analyst consensus. So we've got people here from Deutsche Bank, JP Morgan, Wells Fargo. 1 sell, 7 hold, 24 buy, 8 a strong buy. So that is a buy overall. Sales compound annual growth rate around 16%, which is a true growth company. Current ratio, now this is incredible. So usually when I'm looking at a business's debt levels, I look for a company which has a current ratio of around 1.5 to 2. So the current ratio is basically your short-term cash to your short-term liabilities or debt. So generally I look for around 2, which means the company can pay off its debts at least twice with the amount of cash it's got on hand. Nvidia's got a current ratio of 10.29, so extremely unlikely to go out of business. It's got a lot of cash on hand to weather any storms that may come, and also a lot to reinvest into operations. Price to book value, 23.9. It's not great. P ratio, 50.5. So generally it's hard to find a stock in that golden zone in terms of it being a fantastic growth company at a fantastic valuation. And of course, Nvidia is no different. It's a fantastic growth company, but the valuation is extremely high. So you're looking at a PE ratio of around 50, which is extremely high. Diving into the share price for Nvidia, we can see that it was around $200 a share in 2019. So that was fantastic. And then around March, when obviously the crash happened, it didn't dip much compared to many other companies, but still around $200. However, since then, obviously as the momentum in gaming, it's risen by over 150%. So if you would have invested here, say £10,000, $10,000, you would have made 10,000 within just a few months up until now, till August. And then I believe the stock's going to keep going higher. So there you go. And you also would have got this nice 0.13% dividend, which is good for a technology company. Now, an interesting part I always check with these companies is whether there have been any insider selling or insider buying. Ideally, you want to look for insider buying, which means that the board or the people in the company, they have a lot of faith in the business. However, I can see a lot of insider sell-off. So Mark Stevens, $10 million, $20 million on the 23rd of June. Let's see who Mark Stevens is. I believe he's a director. Mark Stevens, independent director there. So these are selling substantial amounts. We've got a few more sell-offs here by a lot of members of the board. So that is a worrying sign. These were selling at around 387. So to me, these could be one-off sales for, say, they want to buy a new house, or it could mean that they think that the business is currently overvalued, which is my initial worry with the business. So that's just something to be aware of. I do believe it's still a fundamentally strong company, but these sell-offs are something which you do need to be aware of in terms of the valuation currently. Overall, I believe Nvidia is a fantastic company which lies at the convergence of at least 4 major technologies, from gaming to artificial intelligence to data centers and even autonomous driving. Their financials look superb and the prospects for the company look incredible. So do I personally own shares in Nvidia? Well, this may be a shock to everyone, but at the moment I don't have shares in Nvidia stock. I've been watching this stock for a while now and I love the business, I love the financials and I love its growth, but I just haven't found the right opportunity to get in there. But think about it like this. Imagine it's a girl that I really like. We've been out on a few dates. I really like her a lot. I've been watching her for a while now, but we've just not got to that stage where we're really involved in a relationship. That's the stage I'm at with Nvidia. I've been watching it. I've been doing the earnings calls. I've been researching the stock, but I'm just finding that right opportunity. So what are your thoughts on Nvidia as a business and a stock? Let me know in the comments below and I'll join in the discussion. If you guys are interested in these type of growth stocks, you should also check out the videos I've done on the mining companies such as the nickel and lithium miners, which could heavily be impacted by Tesla's business. For chip manufacturing companies, I also have a video on Intel, which has currently took a big plummet at the moment and may be great for a contrarian value investor. Also, I have a very special treat for you guys. So as you guys know, to invest in stocks, I use the free trading platforms, Trading 212 and Stake. So if you guys would like a free share with up to £200 or $200 for any one of those apps or both of those apps, then you should definitely use my special links below. When you deposit, you'll get your free share. Now, this is a limited time offer, and I know many of these free trading platforms are actually stopping this service as they're already so popular. So sign up, use the links below, collect your free share, and have a Merry Christmas. In addition, if you guys enjoyed this video, I would really appreciate it if you give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock market picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.